Hey everybody, my name is Matthew Sambanis. Thank you for taking the time to watch this video. And in today's video, we are going to discuss the Federal Reserve not changing interest rates and what that means, the implications, and also how to profit from it. So essentially, Federal Reserve came out, said no cuts imminent, and they most importantly removed three key words: banking system soundness. So that should scare the bejesus out of everybody. Since their last meeting in December, which we're going to also discuss a little bit as well, the dollar's down, bonds and gold are up, and Bitcoin has been up, and big tech has been surging as well, because they've continued to loosen monetary policy. The looser the monetary policy, the more inflation that we have, and inflation isn't just, the price of everything going up, which it has been, and we've, experienced substantially. It's also the price of assets going up as well, which is what happened for the previous 15 years that we had this loose monetary policy, and everybody was happy about that. Home prices went up, stock market went up, 401ks went up. All is well with the world when you're experiencing great inflation like that. But once it starts moving into the cost of living for everything, people have a problem, right? And the actual definition of inflation is the printing of money. So the cure for inflation, by the way, is higher interest rates, which we have not had. So what did the Fed do and say? The FOMC voted unanimously to leave the benchmark rate unchanged, which was expected, between the range of 5.25% to 5.5% for the fourth straight meeting. So again, the Federal Reserve keeps on discussing how they want inflation to be 2%. It used to be average 2%, so technically we should have had massive deflation to make up for the huge increase in inflation that we experienced from 2019 through 2023, which we have not had, nor are we going to get, by the way. Prices are going to stay elevated until the dog do hits the fan and everything crashes. But, they were at least more hawkish this time in saying that they were not going to raise rates any further. The problem is the price of everything continues to go up. The price of some things have gone up substantially, which we will discuss. By the way, please be sure to like, comment, and subscribe if you like making money, economics, finance, and other things of that nature. It helps me a huge amount. It lets me know that I'm helping people, hopefully. And if there's anything that you want me to comment or share about, please let me know. So the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. And that's kind of what I just covered on. And, again, it used to be an average, but apparently we can have, 30% year over year growth for 3 years at a time, where the price of everything basically doubled or tripled or more. And, who cares? And like I said before, they removed any reference to growth slowing from its strong pace. And they also removed the U.S. banking system as sound and resilient, which makes sense because of look at New York Community Bank crashing today. They reduced their dividend from 17% down to 5%. And their stock tanked 45%. This could be a whole other YouTube video. I'm not going to get into it now. I'm not going to get into the specifics. They bought another bank a while ago, or some of its assets from, a year ago when we had the whole banking crisis, and the Federal Reserve did everything that they could to crush the idea of any banking crisis. But what they really did was sweep the issues under the rug. And, basically interest rates need to be at 8, 9, 10, 12, 15%. They need to go Paul Volcker, right? Why? Because everybody keeps on spending and people keep on going further and further into debt, and the cost of everything continues to go up. So I have the consumer price index, basically the inflation numbers that came out in December, which rose 3.4%, which is in December of 2023, not even a month ago, way more than 2%, right? 1.4% over, which if you annualize that, that's, way more than 2%, long story short. The consumer price index rose 3.4% last month relative to a year earlier. That's larger than the increase of 3.1% in November and 3.2% in October. So again, consumer prices going up. Inflation needs to go down. You need to raise rates so people actually start to save money. They have a reason to save money, put money in the bank, earn interest on it, and things of that nature. I just want to go through some of the huge numbers in terms of inflation that it showed up in. Juices and drinks went up 19%, right? Who uses juices and drinks? Every human being in America. I mean, I walk into the pizzeria, I get a small Coke to go or something, or a Sprite, very rarely, by the way, for health purposes. It's astronomically priced. Baby food and formula up 7.3%. Sugar up 7%, frozen vegetables up 6%. Food from vending machines and mobile vendors up 13%. I mean, that's absolutely crazy, and that's, I think, probably low if you compare it to your local pizzeria, compare it to McDonald's, who keeps on raising rates, especially in communist states like California. No offense. Motor vehicle insurance up 20%. So literally, and here's where I have an issue with these numbers. Geico tried to raise my rates by 40%. And yes, I can afford it, but I was having a bad day to begin with. They billed me. I saw the bill because it was going through my, it automatically debits from my bank account every month. I was apoplectic. I was absolutely irate. I was having a bad day, and it was just the principle. I can afford it. It's on my Porsche. I have 2 cars. Thankfully, I'm a very lucky guy. I have 2 cars, or I have 2 garages for my 2 cars. But 40%, so again, that's twice as much as their inflation, and that's way more than their 2% inflation. Veterinarian services up 10.8%, call it 11%. Motor vehicle repair, most people aren't fortunate enough to have a brand new car that's covered under warranty. That's up 11%. Non-prescription drugs up 8%. Rent of primary residence, 6.5%. Television service up 5%, 5.6%. I was going to actually do a video on this as well, and maybe I will. And by the way, if I'm missing anything, please leave a comment below. But I think if you look at any of Disney price hikes, if you look at Netflix price hikes, if you look at all these streaming services price hikes, you're going to see they're way more than 5.6% every year. They're 20 to 30%, if I recall correctly. So again, these numbers that the Federal Reserve is coming up with, the price consumer index, is absolute BS. You know it. I know it. We're being lied to, and it's way worse out there, And unfortunately, they don't have the backbone to do the right thing. Shelter prices rose 6.2% over the past year. As the largest piece of the averages, households' budget shelter accounted for more than 2/3 of the CPI increase since December 2022, according to the Labor Department. To buy a house on Long Island, at least where I'm located, to buy a little hut, 2-3 bedrooms in the form of a little hut, $500,000. It's just disgusting that they lie to people like this, and then they blame it on businesses, they blame it on consumers. The government's responsible. They've kept interest rates way too low. They've continued to. And, to go on this article, that discussed the U.S. Consumer Price Index, then they say prices have leveled out or even declined in some categories. And then they go on. For example, prices of used cars and trucks have decreased by 1.3% since December of 22. Who cares? Right? Literally, who cares when they've literally doubled and tripled and quadrupled and added on, buyer premiums and seller premiums and all sorts of nonsense. What used to be a $20,000, $30,000 car no longer exists. I believe the average new car price is now like $40,000. The amount of people with auto loan debt, all-time highs. People with auto car payments more than $1,000 a month, all-time highs. Loans, I believe, are anywhere from 60 months up to 82 months on a ton of loans for more than $1,000 a month. This is not sustainable. The consumer is not strong. The consumer is weak. And I don't want to keep you guys on here forever, but kind of going back to New York Community Bank, who has exposure, it's a local bank from me, who has exposure to New York City rental property, New York City commercial property. There's a deal where fire sale, Blackstone's default in Manhattan office lower town market at 50% discount. And this is what's going to continue to happen this year. Sources close with Bloomberg said the $308 million mortgage on a Manhattan office tower owned by Blackstone is being marketed at $150 million, or about a 50% haircut. Right? 50% is a huge hit. When you look at the reality, though, in April of 2020, the 26-story tower was appraised at $175 million, down 71% from $605 million in 2014. So it's not a 50% haircut. It's more like a 75% haircut. And this is going to get worse and worse. I also recently heard that a third of ARM's adjustable rate mortgages are due to reset this year. All these people who've been enjoying 1%, 2%, 3% interest rates on their mortgages are going to go up 7%, 8%, 9%. I mean, that's going to cause a whole other domino effect, and it's not going to be pretty. So let me get to the other point of which you also care about, hopefully, how to profit. Buy gold, buy silver, buy foreign stocks. Save cash so you can buy assets when they crash. And buy physical assets as well, and have it, have your money be ready to be deployed to earn, and go long silver. And, if I missed anything, please leave a comment below. I appreciate you watching. I film all these videos free form, one take at a time. I don't edit them. So if this was a little sloppy or if it wasn't that well thought out, I apologize. But again, if you watched this far, I really appreciate it. And I thank you for your time.